Hello and welcome to News Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. I am Chukunonso Modi. So let's take a look at the stories hitting the front page this week. Now the big story, CBN MPC's last call for 2021, but all Arsenal fully exhausted. SUP headline, committee to keep pro-growth objectives intact, market stakeholders with muted reaction. Another headline is experts weighing a Seplat CEO talks up gas for Nigeria's carbon reduction. Sub-headline, but country must establish grid base for its energy transition, and experts warn of dire consequences of Buhari's 2060 energy transition. Now, another place to look at is finance and investment. Their diaspora remittances back on track. You should also look at energy, power, renewable, Najee's geometric $50 million per deal. Now, under commodities and agriculture, better valuation for Nigerian cocoa. Then, executive knowledge series, vaccine production needs flexibility. And please check out Visionary Voices with Think Small to Fight Climate Change. Now let's bring in Philip Isakpa, the publisher of Business AM, to help us make sense of the headlines. Good morning, Philip.
Good morning.
Okay, so let's look at the first headline. That's CBN MPC's last call for 2021, but all Arsenal fully exhausted. Now, the last Central Bank of Nigeria's Monetary Policy Committee meeting in September saw members vote unanimously to leave the policy rate of 11.5% and other parameters unchanged. Now, for the sixth and final time in 2021, the committee is gathering again today and tomorrow to decide on major economic parameters in the face of recent domestic macroeconomic developments. But analysts have said there is likely to be an unsurprising outcome after Tuesday. As in all the MPC meetings held so far this year, the committee had chosen to hold all parameters constant. What do you say to that, Mr. Philip?
Well, the central, the Monetary Policy Committee has been a bit, what we say, dovish in terms of trying to ensure that the economy remains stable and remain on track, to recovery and all the we have seen so far. So they have kept the rates constant for some time, and going to the close of the year, you do not expect. Analysts are saying that they do not expect to see any dramatic changes. So the meeting will hold today and hold tomorrow.
All right.
But the good thing is that two indicators that came out going into this meeting, are two good indicators that the members of the Monetary Policy Committees always take along, in reaching a decision, and that's inflation and also the GDP. So good at him that those two numbers, inflation for October, even though we still have double-digit numbers in terms of inflation, but we can see that it's moderate. It's not as if inflation is rising in such a high number that it's worrying. That is different from what has been happening in say some months back. So you have that inflation numbers, which is stable, so to speak. And then you have the GDP numbers that came out for Q3, that suggested that things are improving, even though not to the level that one will expect, but so those two numbers will be taken into the meeting, and then analysts will have looked at this and say, there's the apple cart will not be disrupted, and they expect that when they look at those numbers, they will keep the rates they will still maintain the rates, at 11.5%, and as well as the other parameters. There's no need, and then wait out. What normally happens is that they sometimes reach a decision. So they reach a decision and they wait out for some time to see what will happen around the economy, to see whether there will be any dramatic changes, because sometimes they take a decision and for that decision to play out, in terms of how it affects the different aspects of the economy. And that's what has happened over the last few meetings. especially the meetings throughout the year. So they have been very stable in terms of that, and then there isn't, analysts are saying there's nothing, to suggest that any dramatic change will happen. The only area where there was some issues, and then we have been seeing some clawing back. It's exchange rate,
Okay.
the fact that you don't have enough forex in the economy, and you still have backlog of money, investors who want to take money out, so those backlogs have not been cleared, but we saw the exchange rate, the naira dropping dramatically for some time, but after some decision was taken not too long ago, we have seen that the naira has perhaps you could say gain some strength even in the unorthodox market. So that's one area that would have been a problem, but analysts are saying there isn't anything that is worrying, to see any dramatic change, in terms of how the monetary policy rates will go after they close their meeting tomorrow.
Okay. Now, two cheering developments the members of the MPC will be taking into the meeting today and tomorrow will have to be the Consumer Price Index for October and gross domestic product data for the third quarter that have been released. Please shed more light on this, Mr. Philip.
Yes, that's exactly what I've just spoken about.
Okay.
The GDP number, Q3 GDP number, even though slower at 4.44%, the performance wasn't not particularly fantastic,
okay.
but it's still positive, So if you look at it year on year, in terms of marking it back to 2020, 2020 was negative, So at 4%, quarter three, that's a good number, a good performance for GDP, for Q3 compared to Q3 2020, So that's something that they will take into the meeting. They will find some comfort in that, in taking a decision in terms of whether to be dovish or hawkish about it.
Okay.
But if you look at this, analysts are saying that it's not something that is so worrying, And then you have other parameters too, Oil prices are stable in terms of even rising. If you benchmark that, what oil prices, is doing above $80 per barrel compared to what the budget has estimated.
Okay.
So there's indeed, some accretion in terms of foreign reserves, because as oil prices move up, Nigeria is able to be able to, the central bank and Nigeria as a whole, it's able to create some forex reserves. So that's positive. The MPC will be taking that into the meeting. Inflation numbers, for last month, October, was not, there wasn't anything dramatic about it, and that again was positive, and then that's the Consumer Price Index, even though you had some areas where there was some concern, but it's such that the members will take some comfort in those two numbers that came out in October. That's October inflation and Q3 GDP numbers that came out last week.
Okay. Now, aside carefully examining several economic indicators that will help spur growth and recovery, what more are we expecting from the meeting this week?
Well, they are going into the meeting end of the year. We're in November.
Mm-hmm.
The year is almost gone. So they'll be looking forward to next. To 2022 in terms of setting out some. Perhaps there might be some decisions that will be taken, not in respect to what you call the rates, but in terms of setting out some basic parameters in terms of looking ahead to 2022, especially as you go into the first quarter 2022. And, so because what the decision that they will take now will also have some impact, in early 2022. You could have some decisions that will be taken, in terms of setting out some basic outlook in terms of expectation, by the committee itself, and the central bank as a whole, in terms of what it looks forward to having the economy, prepare itself for going into the new year. So a lot of, you could have that as a side, what's it called, an additional, some additional decisions that will be taken in terms of setting out, to prepare the economy, in terms of what the thoughts that they have, with regards to what they expect to see, and then to give some kind of comfort to perhaps operators within the economy, particularly the private sector players, so that they can prepare very well. It's a good thing that the budget for 2022 it's already in. And, so that it's no longer those days when you have to wait for the budget January, February, up to March, sometimes into April. So the fiscal side has already outlined what it expects to push in 2022, so the monetary, so we should expect something, from the monetary side in terms of setting out some kind of parameters, in terms of expectation, in terms of how it hopes to drive monetary policy in 2022. You should have a snippet of some information regarding that, and that would be an additional. Analysts would definitely be expecting that. We on this side were definitely expecting to hear one or two things said about what they hope to see and what they hope to do, and how they hope to see the economy play out, especially in the first quarter of 2022, and then perhaps going further. So we will expect to hear one or two things in that regard. And then, but with regards to rates, we expect that they will hold the rates across board, and there will be no drama. We don't expect any drama out of this meeting.
All right, so we'll wait and see the result from the meeting by tomorrow. Okay, looking at the second headline, two experts weigh in as Seplat CEO talks up gas for Nigeria's carbon reduction. Now, Seplat Energy PLC, a major Nigerian independent energy company listed on both the Nigerian and London Stock Exchange, says its gas development program constitutes a major boost for Nigeria's energy transition agenda, as well as a global call for carbon reduction. Now, its Chief Executive Officer, Roger Brown, speaking at the recently concluded Africa Oil Week in Dubai, says it is important for the world to understand the peculiarities of Nigeria and that the country needs the right base to transit to renewables. Now, in other words, the country must establish grid base for its energy transition. What do you say to that, Mr. Philip?
Well, this is the current global debate that is on. You will recall that the what's it called, COP 26 just finished in Glasgow, Scotland.
Yes.
And the world, especially the rich nations of the world, who have used all the oil and gas resources to develop their economies, haven't seen the devastating effect, of carbon, to the world, and now calling for a reduction, But Nigeria is a gas. Many people have said that Nigeria is more a gas country, than an oil country, and it needs its gas to develop its economy. Gas-based, it's very easy. You can use gas to develop your electricity. Nigeria has a great deficit with regards to to electricity production in the country. We don't have enough electricity, but we have plenty gas, and gas should be used to do. So Roger Brown of Seplat is saying that, of course, they have what's it called a strong gas what's it called program by Seplat. And Nigeria as a whole has also talked about a program called Decade of Gas. Decade of gas. So Nigeria is effectively pursuing gas. Wanting to develop gas across the entire value chain of the Nigerian economy. You have the AKK project that the MPC is pursuing. From Ajokuta to Kano and then going further to different, into Africa as a whole, and then perhaps to Europe. But so Seplat is saying that what they are doing, will help that drive, and that Nigeria, should be allowed, to develop its gas potential, to use its gas to develop its economy, and then help it and that this will help Nigeria to achieve the carbon reduction program that the world wants to see take place. Because with gas, you can, a lot of things can be taken out of the table. For instance, the use of firewood and the rest of it. The use of things that can be dangerous to the ozone layer, to the atmosphere. Can be reduced. So this is what they're saying. But so some experts are saying, well, of course, this is good. But there's a need to be systematic about it. President Buhari at COP26, at the conference in Glasgow, proposed a 2060 date for Nigeria to attain its own energy transition. But some experts are warning that there could be some consequences from that decision. But not outside of that is the concern, that there isn't talk is cheap. Perhaps a lot of talk, coming from government without having some action plan. If we have been able to talk to a lot of people, in the industry, and they will tell you that even though Nigeria is talking, Nigeria hasn't really moved as quickly as it should. So some experts are saying that there's a lot of things going on all over what's called the world, in terms of the pursuit of reduction of fossil fuels, the use of fossil fuel, globally. People are, especially the move from what's it called, to reach the net zero climate resilient future, energy transition, it's a popular choice, somebody said. But the key thing is that with the world moving in a particular direction, and Nigeria perhaps going in a different direction, are we going to be caught in the middle, caught unawares, because if the world is moving into what's it called electric cars and moving from deciding that they won't be using what's it called fossil fuel for in the next. Some people have even put for some earlier dates, 2030. Some even earlier than that. So those are the concerns that these experts have. How is Nigeria aligning itself to what's going on globally? Is there a challenge in that? So they say Nigerian, like we said, there needs to be some action plan. There needs to be a focus. There needs to be there's clarity in terms of what Nigeria is doing. You don't just go to a conference or a forum like COP26 and just read out a date and then come back home and do nothing.
That's the concern
that they have.
Yes. So does this mean that you're saying 2060 is too far because the rest of the world would have gone renewable by the time we get there? Is that what you're saying?
That is one thing that they are saying.
Okay.
But the most important thing that they are looking at is that you don't have a systematic, action plan. You don't have a particular push. If some people are saying the deadline for battery powered vehicle is 2035. So if they have all moved to left fossil fuel, and by 2035 they're already using battery-powered vehicles, you know, and then you are putting your date at 2060, you know, even though they say, oh, 20, it's not a bad idea because you can look at that in terms of the gas that Nigeria has, you know, being able to utilize the gas resources to be able to develop its economy. You know? But you need to have a systematic working program, you know, a program in place, you know, where one can see some milestones, you know, heading towards 2060, you know. But their fear is that we will read out a date 2060, you know, and then we'll come back home. There will be no
nothing be done
to that. You know, so the key thing is that we have had many people in the industry will tell you that in 2015, you know, in Paris when the whole issue started, you know, that Nigeria did sign up to set some was a commitment, you know, and that those commitments that they signed off in 2015 or so, you know, nothing, you know, nothing serious has been done in terms of moving towards attaining those commitments that were Nigeria signed up to, you know, or signed to. You know, so those are the issues. So you can go to Glasgow, Scotland, and declare 2060, you know, and come back, and then
nothing be done.
So, and then the world will be leaving Nigeria behind, you know. So that's the concern that they have.
All right. Hopefully, keeping our fingers crossed, it won't just be mere talk this time, and the government will actually do something.
We hope so.
All right. So thank you, Mr. Philip. We'll see how the stories develop this week.
Thank you very much.
That was Philip Isakba, the publisher of Business AM, Nigeria's fastest growing financial and business newspaper. That's all for now. Stay tuned for more.